Are we live, Neil?
Yes.
We are live.
Hey, everybody. Welcome to Get Technical. I'm Neil Hamilton. With me today is Spencer Israel. Spencer, thanks for being here.
Look at this comment.
And producer Aaron Bree out of the hobbit hole into the light of day. Dressed like a Baggins. Loving it. Loving it. I want to get started, guys. Let's have a little, we're going to do a little react. We're going to do the Benzinga boys react.
Just promise we're only going to react for like 30 seconds so we don't get hit with a copyright.
Pinky promise.
Watching. My straw reaches across.
This is XLE. This is the oil energy.
Okay.
And this is tech. This is Mark Zuckerberg.
I'm getting it now.
Drink it up! Don't bully me, Daniel!
Okay, Neil.
Okay, let's stop it there. No spoilers. That's why we'll end it there, guys. So what is up today? Oil has been and continues to drink tech's milkshake. And same thing with metal. Metals and oil, very post-apocalyptic scenario. It's feeling like Mad Max out here. So let's get technical, guys. That was smooth. That was smooth, guys. All right, let's get technical. What do I got here? I've got a bunch of squiggly, squaggly lines and yeah on XLE. Ticker XLE is the, you can see it right here, Sector Spider Trust Energy ETF. This is energy, mostly oil. Let me hide all of my indicators. Boom, boom, boom. 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 Let's just look at the darn thing. Let's look at it in all its beauty. Pure price. Oil, guys. So we're looking at the whole sector, and then we're going to pick out some stocks. I got one. You guys, let me know in chat if you know which oil stock I'm going to pitch to you once we do this sector technical analysis. All right. So some of you guys are going to call it, and I'll give you a hint. It is also the ticker of a really good cryptocurrency.
Oh, I know. Can I guess?
No, of course you can't guess.
Fine.
Wait, it's an oil stock, and also that clue doesn't help me because I don't know jack about.
Actually, never mind. I just looked up the stock I was thinking was, and I don't think it's this one anymore.
What were you? What's your guess, Aaron Bree?
I was thinking ADA Cardano because that was like a crypto that had a ticker that could also be a stock, but it wasn't that.
No.
Is it SafeMoon? Is that a stock?
No.
He said really good crypto.
Oh.
Ooh.
Wait,
you guys got some great guesses so far in chat. We've got ET, Energy Transfer. I know Energy Transfer is one we'll talk about. WTI, XOM, of course, ExxonMobil. Good so far, but you're not hitting it, guys. You're not hitting it. So guys that are tuning in live, we're going to go over the sector ETF really quick just to look at how we can identify a breakout. And actually this showed itself a while back. So we've been talking about oil stocks and Get Technical since the show started. But might be a good opportunity to get in now. It might not be too late. So we'll take a look at it. And then we'll get into the individual oil stocks that could be good buys. So the very first thing that we need to identify here is trend. We're looking at XLE. Downtrend. Let's go to monthly. Whoops. I'm looking at a monthly chart, XLE, and you can see that this has been a sustained downtrend. But then we had a reversal. And we've established what so far has been a short-term uptrend. Now you can see on the monthly, it's super easy to see here that we're just about hitting this prior resistance. So I'll draw a line. I'm just going to click on the right and draw a line at that resistance level so that I'm not surprised when I get to my day chart and see where my candles are stopping out. Boom. So this is very important when you're talking about a reversal, is what was prior resistance are going to be the stopping points, or usually the points of consolidation on your way up through your uptrend if it is destined to continue and drink the milkshake of tech stocks. So now we're on weekly, and we're going to keep going down. And you can see that on the weekly chart that this line that I've drawn is a multi-week point of resistance here back in February of 2020. So this is going back, sold off a whole bunch into COVID times. We had some big pops here 2 weeks in a row with massive movements. All right. And then what we see here on the bottom is the formation of a sort of sloped double bottom pattern. Now, I'm going to draw this on the weekly, then we're going to drill down to the daily. Let me erase all of my arrows. We've established that we have a downward trend that hit a double bottom and then is now in a resolution mode of the double bottom. So let's break down that resolution. First and foremost, when you're doing a double bottom, you want to identify your low points, right? We've got boom, we got boom. The next thing you want to identify is the middle that makes like a sort of a W shape. So you're identifying this thing that I'm circled right here. Lots of names for it. But let's just call it a pivot point. And guys, you guys are still throwing tickers at me. I see none of you have gotten it yet. Amazing. I'm so proud of myself. A double camel formation. Puking camel. If it starts to go down. So when you're drawing a double bottom, you want to box in the trading. You want to box in the price structure, but you want to avoid wild swings in price and focus on the actual supply and demand levels. So I'm going to do that right now. And the way I'm going to do that is with my ruler tool. To just do it really quick, this is a quick trick that you can do. I'm going to go to the low point of my double here. And then I'm going to look where there is resistance today. And look at this. Using my ruler tool, the halfway point of my ruler tool is lining up perfectly. If we box this in with what I would call the meat of the trading. This was the value zone. This is where most of the action took place. This stuff can be a distraction. So this upper level of my rectangle is what I'm going to use for the midpoint of my double bottom. So let's get that ruler tool back out again. Put it right about at the top, and then you can see that that lines right up with that line that I drew previously. Let's go ahead and get that back in here. Move it up just slightly so it's touching the upper resistance and the body of this red candle. You can see that we got stopped out there today. The question is, can we break through? Can we break through? What I should point out now is that when you're talking about double bottoms, you want to take the depth of your double bottom, which is the lowest point, up to the meat of the trading, and then add that to that meat of the trading or the resistance. And you can see that we have resolved the double bottom. So if you were looking for a trade earlier on, we already had it. And we've been talking about oil stocks on this show for a while. A few of them. The ticker that I'm going to mention in a moment, if you keep watching and hit that like button, I shall reveal also had the same pattern. So let's get that out of the way. How else could you have identified an opportunity here? Well, let's remove our drawings and pull out our moving averages. Let's pull out the 50 and the 20. Okay. Interesting. We see the 20 cross above the 50. That's nice to see. And it's been pretty much riding through as a mean here. Now let's pull open the 200. XLE on the weekly. And actually, I'm on the weekly. I should be on the daily. So I'm going to switch down to daily because I want the 200-day moving average. Now we see it a little bit more clearly. So let me move these. So we just have the only two moving averages I have are the simple 50 and the simple 200. And you can see that the 50 crossed above the 200 on December 20th at the end of last year, forming or signaling a golden cross. Give me a 1 in chat if you're familiar with a golden cross, and give me a 2 if you're not familiar with a golden cross. Your guesses are really good. Occidental Petroleum, great guess.
That is a good guess.
Yep. And then what's the other one? I saw another really good guess in here.
XOM, is that a crypto?
I don't think so. I don't think so. Okay, so it looks like a little even distribution of 1s and 2s here. So a golden cross is a buy signal, widely recognized as a XLM is a crypto. Yes, absolutely right. What is XLM? Is that's Stellar, I think. XLM is Stellar, and XLM is also the metals and mining ETF. So good guess, but we're looking for oil. The what I'm talking about is the golden cross. That's exactly right. Yeah, it is. Zilcho, that's exactly what I'm saying. So you get a golden cross when the 50-day moving average, crosses above, as it is right here. Yellow is the 50-day, red is the 200, crosses above the 200-day moving average. And I just have an additional indicator here to help me find that just visually. So we call this a golden cross. You'll see it on a lot of cryptos that went parabolic before they went parabolic. So that makes it, if we sort of erase time, this kind of looks like a bunch of cryptos, right? Where it's like a little broad base kind of thing, and then one day it just starts doing the. That's a little bit loud. I'm going to turn that down a little bit. So this golden cross point, which would have been December 28th, was time to start drinking. That's when we really started drinking Tex milkshake, right? Oil stocks. So this was an entry signal. And that would have gotten you in earlier than that, what I pointed out earlier, which was the, let me get the ruler out. Just the pure price pattern, like double bottom thing. So what you could have done is recognize this nice golden cross, upward trend, and then targeted this resistance zone right here, which I'll draw out with a line. And again, that lines right up with what we call the meat of the trading. Like where the real action was hit repeatedly by price. And I'll put this up here. Whoops, not that one. Thank you, 13, for putting that in text. 50 crossing the 200. Welcome to the party, Miles. Welcome to the party. Okay, so that was a signal, and I'm loving it. I think it's look, right now we're testing this previous level. But things are going on in the news fundamentally. You guys already know. I don't even need to talk about it. And plus, I don't talk about fundamentals that much. I'd like to focus on the price action. I think price precedes sentiment. So this is where we're looking. But we want a cross above this key level of resistance. Now let's double click my chart, bring up the RSI, and note that we've got a little bit of room to go before we get back into this oversold territory. Or overbought territory, not oversold, overbought, which is about 75. This one likes to hit. Look at this, pretty consistently 75. It got monstrous over here. Some wild action, but you can see 75 is pretty much the level that this ETF likes to hit before it starts to get into selling. So we're getting up there, got a little room to go. Gonna need a spike in volume. I've got my average volume here with a yellow line. We're going to need a spike in volume to thrust us over this resistance with XLE, the energy, predominantly oil ETF. You guys are not getting it. You're not getting it. You got, we got SLB. We got, what else we got? XLM. Yeah, XLM is the metals. Yeah, lots of great guesses. So the oil ticker that I like, which I haven't technically analyzed, so we might discover that it's not a good trade, but you know, it's about the journey, not the destination. The oil ticker that I like, that is also a very interesting cryptocurrency, has the same ticker. VET. VET. I think that producer AB is filing his taxes or filling out his college financial aid application. So I'm going to just go ahead and just remove him from the screen. Yes, VET. That's absolutely right. That's VeChain. If you're looking at the crypto, VET USD. And then here it is Vermilion Energy. We liked this previously if you're watching the show because it had this monstrous gap on the way down that we were looking to close, right? And we got some great moves on it. Look, same thing. I still have the same indicators open. So back on XLE, the energy ETF, we got the golden cross right here with the 50-day crossing the 200-day moving average. Right here, looks like we're about to perhaps bounce off the 50. I can pull up some more indicators, but right now I'm just trying to keep the screen clear and then point out one more thing, which is that paintbrush time. We're not in overbought zone yet. We're not in overbought, so I think we've got some room to go. We've got some room to go. Yeah, we can talk about VET as a crypto too. So a price target for VET, there's a couple ways we can do this, and we'll start with the double bottom and just check if our resolution was found. So just like with XLE, we're going to focus on the meat of the trading. So let's go ahead and just use a rectangle tool. Boom. Which I guess I had on my shortcuts. So lowest point up to the meat of the trading, which you can see this gap up here. I'm going to try this one out and see if that came up as resistance again. And it did. So this is just about boxing in the double bottom. And then what we do is take the low point up to that meat of the trading and then add it to that meat of the trading. And you've got the price target for the full resolution of your price pattern. Still has some room to go. And let's just draw this out a little bit more. Whoops. And we find that it's exactly at this resistance level from March 20th. March 20th, what was that? Year was that? Yeah, 2020. Duh, this is a daily chart. So still room to go on VET. That's why I love it. It's not oversold. Earnings are behind us. Not a bad entry. Let's go ahead and do one more thing here. I'm going to turn on my pivot points. Okay. So pivot points, I have them set to traditional. They look different on a lot of different charts. Thanks for pointing out the 500 daily moving average. I'll add that as well. But really quickly, we can just turn on these pivot points and right away, they're showing us R1, R2, R3 resistance levels, S1, S2, S3 support levels. And you sort of get this aha moment if you're new to pivot points or moving averages or using them at the same time. The 200 is right at this support level, right? So this stuff is calculated based on previous price action. So I have this column of support resistance lines that matter now and into the future. And then I also have the historic support and resistance lines because going back, they make it much faster and easier for me to find those points so that I can draw my horizontal support and resistance without just purely looking at the candles. This is just to help you out. It's not like an absolute must follow the rules. This stuff is calculated based on price history. So it's just a faster way for you to identify key levels. So we hit this resistance line and we couldn't get past it. Broke above it at some point today, but the body's just not quite there. Sold down a little bit. So I like this one. And then someone pointed out that we should pull up the 500 day. So let's go ahead and do that. Let's pull up the 500 day moving average. Let me just add another moving average here. So it's just a regular simple moving average. And I'm going to now edit it and change the length to 500. It says length instead of days or weeks or something like that because it wants to remain agnostic to whatever chart type you're looking at. If you're looking at the daily chart, it's going to be 500 days. If you're looking at the weekly chart, it's going to be 500 weeks. So that's why it says length. But in this case, we're looking at a daily chart. This is just going to mean 500 days for us. And then look at that. Look at that. So 13 in chat pointed out that we should watch for resistance here on this 500 day. That's the blue line coming down, and it's right about at this R2 resistance level on our pivot point indicator. So I'd be looking for a breakout above this R1 at $8.15, very confidently targeting an 8% gain up to the next level, hitting that 200 or that 500 day moving average most likely at the R2 pivot point. And these are just our levels where we're saying, all right, I'm going long until this, and then watching what happens. And if we consolidate, I might treat that as an entry. I might take profit and move on to the next thing. But these are our speed bumps on our way up in the upward trend that we have now established following the double bottom reversal on VET, Vermilion Energy, creepy song, switching it. So guys, yeah, born to be free. Congrats, VET, for the win. I've made money off it so far. Way to go. This one, some other great oil stocks to look at. Let's go ahead and just blow through a couple.
I finished my taxes, but you mentioned the creepy song.
Yeah,
we don't really. I think it needs to be turned up a little bit. The background music.
Oh, really?
Unless maybe. There we go. That might be a little too much.
Okay. Or not enough?
Louder. No, I'm just kidding. Down a time. We want to be able to hear our special guest, Chris Capre.
I'm not gonna have the music on in the background when Chris gets here, unless he wants it.
Wait, but I need a quick clarification. Is it because we've talked about both on the?
Don't. Wait, what are you gonna do? Go ahead. Go. No, I'm sorry. Go ahead.
What did you think I was gonna do?
I thought you were going to talk about my man's name again.
Oh, yeah, because we've already been through this. No, I know. We got the whole story, Italian to French. It's a
Capre, yeah.
I needed a clarification because we're talking about. You said we're talking about oil stocks today, but we've talked about oil stocks in the past.
Yeah, we have talked about oil in the past. What about it?
I want to see some more oil stocks.
All right, we'll hit some more oil stocks. And really, guys, I'm just bragging because we called Oxy, we called VET. We were hitting on these stocks in the early days. Give me a 1 in chat if you're an OG to get technical. You know, we've been out here. We've been knowing about these stocks a long time.
I'm talking about oil.
We're talking about oil.
Months.
We've been drinking that tech milkshake this whole time. Months out here. All right. And now it gets popular. Everyone comes back to get technical. All right. So yeah, we're getting a lot of really good tickers. One that I'm gonna shout out is ET, Energy Transfer, not strictly oil. I believe, yeah, oil and gas pipelines, right? But same industry. I got all my drawings on here. Very simply. Wow, this one is such a beast. So I shout out to 13 in chat. Has been an ET bull for a long time, and what a gorgeous stock this has been. Loftily touching the 50-day moving average, giving you a buy signal, and then just flying away like a beautiful polluted seagull over the Gulf Coast. Thank you. I'm going to put that up on the screen. I'm trying a new thing with my hair. I watched some YouTube videos. Thank you. Okay. So yeah, there's some oil stocks. We got ET, great stock. We've got so what I have here, this is just like the top holdings in XLE, I'm pretty sure. So what I recommend you guys do is when you find a sector that's strong, find the Spider ETF that represents that sector. Look at the top look at the top 10 or 15 holdings. Look at the whole damn thing and make a watch list for all of it. And then you're watching for movers in there, and then do your technical analysis on those individual stocks. That way you know you've got your sector strength. And then you're getting in and finding golden crosses way before it shows up on Get Technical. And then we can all laugh like rich guys. So, all right, good stuff. All right, so that's ET, XOM, of course, ExxonMobil, massive. We should also be talking about Chevron. Oh, did I draw a trade here in the past that would have paid off had I traded it, which I did not? I did. I really did. And look at that spike after earnings here. This is getting messy though, so I'm going to move. I'm going to turn the pivot points off for a moment. This is why it's messy, because I had the Fibonacci on here. So what I did here, I'm looking at XOM, which is starting to get pretty overbought here. So let me draw my line at the levels where it typically gets before it starts to sell, and it's actually a little bit lower. Like this is just about the zone. It's about 76. where it starts to turn around on the relative strength index. But what I did here, so this is a different type of trade than the other oil stocks. The other oil stocks are getting in when they reversed a downtrend. Good gravy. I'm going to delete everything. I used my Fibonacci retracement tool. I started at this bottom and then went up to this top. Whoops. That's not what I did. That's not what I did. Clearly, that's not what I did. Oh, no. How the hell did I make that? Alt F. Let's use this previous high and then go down to the lowest point here. And then you can see a price target level. That's definitely not what I did before, but it's in the past. So sorry, guys. You'll have to go back and you'll have to subscribe and watch the old videos to find what I did. But yeah, this is just using the Fibonacci, creating a price target by going to the previous swing high when this uptrend started to sell off, and then going to the low, which is actually lower on the right side of this W. And then you've got each of your support and resistance lines sort of pre-drawn out for you. And you can see that right now we're trading above the 100% line on our Fibonacci, targeting this higher level. But I'm willing to bet if I go back in time here on ExxonMobil, XOM, that's right, that this is a previous resistance level. You guys, if I go like this, we got our previous resistance level, which is just about on the 500-day moving average. Is that the 500-day? Yeah, wow. I'm going to keep that on my charts from now on, guys. Thank you, 13. And look at that. Look at that. So it's a fight to get out of that. We can also see the body here is getting stuck at these past support levels where the wick is. So that's sort of the breakout we're looking for. Looking for a breakout above 63. What's your target from there? You can easily target 67. Really just target the next resistance level. Okay. That's OLO. Let's look at XME really quick, just metal. Then we're going to bring on Chris Capre. So multi-year. We're looking at weekly right now. Oh, that wasn't the 500-day previously. We're looking at the week chart. So at any rate, multi-year resistance here. On XME, the metals and mining ETF, very similar to oil, has been having its time in the sun in 2021. Let's go back and do the golden cross thing with our 50 and 200-day moving averages. And we can see this is very similar. Very similar. Here we've got the 50-day simple moving average moving above the 200-day simple moving average buy signal. Had I purchased, which actually maybe I did. Let me open up when Chris Capre comes on. I'll have a moment to look at my portfolio because I've been in XME as from an investment perspective for a while. I want to see when I actually entered. But over the course of, let me see how many bars this is. So we're looking at weeks. It's probably several weeks here. Yeah, it's 154. Oh no, days. 154 days. Up 98%. This is just nice. It's nice not to think about it, you know. Okay, guys, CLF had a golden cross at the end of last year. Shout out to CLF. What is that, like Cliff something metals? Yeah, it's steel. Yeah, we like steel around here. We like X. We like CLF. All right, guys, that is enough bloviation from me. It is my pleasure to bring on our guest of the day, Mr. Chris Capre. Hey, Chris.
What is up?
Oil stocks.
And your hair?
You know,
no words. No words.
I'm just.
Were you in a wind tunnel before your show today? What happened? What happened?
Actually, I had an ear. You asked. I had an ear, nose, and throat doctor appointment to get my nose sorted out because I can never breathe through it. And I got out of the house, and there's just something about the sun when it kisses my hair. And the breeze when it blows through my roots, it just produces something wonderful. I don't know what else to say.
Are you like a Head and Shoulders affiliate or something like that? It's sounding like a commercial here.
No, but Head and Shoulders, if you are watching right now, I'm here to shill. I am here to do it. No problem. I'm actually working on the Bang Energy deal. We want that Bang Energy sponsorship. So guys, do yourself a favor. Follow the Bang Energy CEO on Instagram. That's enough. Just do that for yourself because wow, that's a real person. And then also shoot them some DMs and some comments and say they gotta sponsor Get Technical, because you know what, we're traders and we like to have a little caffeine going through our blood. All right, Chris, what is on your mind on this fine Monday?
Let's do the share screen and let me get the charts going. All right, are we all good on the charts? Looks like it.
Yep.
All right. Oh, by the way, producer Aaron is also saying you need to read the book Breath by James Nestor. This is a book I recommended to Aaron. After you read that book, you will take your nose breathing issue very, very seriously. You'll want to read that book. It will blow you away.
Do you think it'll make me want to get the surgery to actually be able to breathe?
No doubt. 100%. 100%.
All right.
When you start to, he starts off the book by going through an experiment, which is because he also has a deviated septum himself. He has a hard time breathing out of his nose. He spends a whole week just mouth breathing. And they look at all his vitals. Like they plug up his nose and they won't let him breathe them out of his nose. Has to breathe out of his mouth for a week. And his vitals just crash. Like his snoring is up like 1,000%, sleep apnea up, like his all his immune system is like down, like everything like just goes into the canner basically. And then they switch him to nose breathing only, can't breathe through his mouth, and all his vitals recover, and then they actually get better from where he started. So yeah, once you read that book, you will never think about breathing the same.
All right, I will read it, and I'll also give my doctor a call. All right, thanks AB for the rec.
Okay, so we're going to jump into BBY. BBY, as you know, we talked about on Get Technical when? Last week and the week before. So BBY has broken through the major resistance here. All-time highs, which were 124, just shy of 125. And the main resistance here at 122.34. So when we look at this on the 5-minute, this thing just exploded. Absolutely exploded. That is, what is that? 30 minutes of straight buying out of the open. And that is like a $4 jump. A little bit of a breakout pattern here. Still holding the 9. Now it's rolling over a little bit, so we're going to test VWAP. But now that we've cleared this major resistance, our prior option, we had a bull call spread on BBY for 115, 120, or we also said the 120 to 125 for May expiry. Both of those a massive profit right now. If you took them, you're in the money. So now that we've cleared out this resistance, how can we trade BBY going forward? I feel like this 122.40 to 125 is now going to be a floor for a launch higher in BBY. So I still have my March expiry options on this. If we get a dip to 125, which was the prior all-time highs, or maybe down to like 123, which is where this kind of whole thing started, then I will reload for a June expiry bull call spread. And this time I'll do a 125, 130 strike. We got to 28.5. And so since I already have May expiry, there's no point in adding another May expiry option onto that. But this kind of clearing out the technical resistance, the all-time highs, that's going to attract new buyers. You're at a 52-week high. It's going to attract new technical buyers. It's going to bring in a lot of cash flows. Whoever was short, they've gotten stopped out. They might even be considering long right now. So I think BBY is a long play, and I think we can take this on a month-by-month basis basically and say, hey, as long as we're holding above 120, 122.5, we can keep rolling these bull call spreads forward. So I'm going to wait to dip to 125, and then I'll create a June expiry bull call spread for 125, 130. If you can't do call spreads because you're on Robinhood, then I would just get straight long calls on a dip to 125. So that would be the play there. If you can get it down to 123, if price gets down there, I would still load up. I would still trade the 125 calls. They'll be out of the money at that point. They'll be cheaper. And then as the market tries to get back to these prior all-time highs of 128, your 125 calls will start to look really good. So play number one is wait till it dips to 125, load up for a June expiry, 125, 130 strike. For those of you that are still learning about options on a bull call spread, that means we buy the 125s and we would sell the 130s up there. By selling the 130s higher up, that makes the 125s call cheaper. It makes it easier for us to get into a long position while capping our risk to the upside, or capping our profits to the upside. So that's option one, long a bull call spread. You can get long calls at 125 if we get there, a little bit more cherry if we get down to 123, and then hold it through June, and ideally hold it for a 130 target. So that's my BBY play on this. I might even get long the stock itself. So I'm already long, options. I'm going to add June options. I might even add some stock play in this because I'm thinking BBY is going to like 150 this year. I think by the end of this year, we will have hit 150. It's been cycling around this 122 for months now. I mean, August 20 last year. So how many months is that? It's almost a year. That's like what, 9-10 months, 8-9-10 months. That's a long time. That's built up a lot of dealer pressure. And now that that's cleared, that's going to open up a lot of the books on that. So I'm thinking 150 target on BBY by the end of the year. So that's trade number one. Any questions on that before I roll?
Yeah, we just got a question about spreads in general. And this is true, as was pointed out, on any brokerage. You can do spreads on Robinhood. You just need to go to your settings and request to have level 3 options unlocked for you.
Yes.
All right, but I think that's about it.
Okay.
Well, actually, so hold on. So there's a question here. Actually, this is a question about supply chain for Best Buy.
Sure.
Do you think that's going to affect it? Does that go into your thinking at all?
I think that's going to have an effect upon it, but at the same time, Best Buy is it's kind of like in a similar position to Home Depot. So here's why I think Best Buy is, while it will be affected by that to some degree, I think that's not the only thing it sells. It doesn't just sell computers. It sells a whole host of products that aren't just semiconductor related. So why do I think Best Buy is going to be in good shape? Well, I'm suspecting that even if we have kind of like herd immunity by sometime this summer or fall next year, the bottom line is people are going to continue to be investing money in their home, in tech, and Best Buy is positioned for that. They don't just sell computers, they sell home appliances. Again, the average American was spending 17% of their yearly budget on transportation pre-COVID. Where's that money going into now? The home. It's going into the home. People are upgrading their offices. They're upgrading their appliances. They're upgrading everything inside the home, and Best Buy is benefiting from that. They're also basically the best store out there right now for buying this range of products. I mean, find me another company who's as well positioned to sell this range of products in this kind of niche area. I'm not seeing it out there. Target is much more diverse in what they sell. Walmart, yes, I mean, they sell some of that, but again, they're much more spread out. Best Buy is more concentrated in that area. So I feel like supply chain, yes, it'll be an issue, but it hasn't hurt this. Semiconductor stocks are falling. Best Buy's clearing out. I'm looking at it from a flow perspective. So when I look at it from flow's perspective and clearing the all-time highs, I think people are going to start buying the stock if they haven't already.
Beautiful.
Okay.
What's next?
Next is BTU. So we're getting into some energy stocks. We have a lot of energy plays right now, not just oil, but we have coal, we have uranium, we have a lot of stuff going on, and they're all really starting to gain traction. Oil, as you've been talking on Get Technical for a while, has been gaining traction. We're going to talk about Exxon, but BTU has broken out of also a major structure. It's been hemmed in by this 523 resistance, which you can see here. Boom, 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 boom. Cleared it. No problem. Open the week. Almost no dip buying. Just straight up bought right on the open. Cleared it. So we're already long this BTU outright. We even see kind of a breakout pattern on the 5-minute forming here. Here's your kind of resistance. Higher lows, curling up pressure, supported by VWAP. So if you're not already long BTU, I am totally fine with being long outright. But also the options, even though the implied volatility is high, the options on BTU are actually pretty cheap, considering where they're at right now. So BTU, Peabody Energy, not that one. Right now, the $5 calls are priced at, for May expiry, are priced at between $1 bid and $115 ask. So if you can get around 107, basically this stock only needs to go to 610, 615 for your calls to break even. That's almost the current price to own the $5 calls on this for May expiry. I'd suggest waiting for a little bit of a dip to VWAP. If you can get a bigger dip to 537, 540, even a little more cherry. But I like the $5 calls from May expiry. You can extend them out to June if you want to. But you can just go straight calls on this one because even though IV is high, they're still cheap. They're still cheap. So I feel like when they're priced like that, sometimes you're better off going long calls. You can do a mix of both. Where do I think BTU is going? I think BTU is headed towards right about here. I think it's headed to about 8.5. When I look at it from an open interest standpoint, it's supported all the way down from 5 and 4. And I'm not really seeing any tapering off of the options and the gamma until we start to get to around 9. So that's why I like taking profit a little bit before that kind of point where the options start to get too expensive to get long calls. So I kind of like an 8.45 target. Do I think it's going to hit it this month? Possibly. But, I definitely think as long as this bullish momentum continues, by June expiry, we should be able to get there. So I like long calls on this one on the outright. Any questions on that before we roll into the next?
Yeah, I have one question.
Yeah.
Which line? So your VWAP in this case is the yellow line. Is it
The gold
yellow
line,
on?
yeah.
Yeah, is it the golden line on every chart that you show?
Every chart.
Okay, cool. Just so we can
every chart. Yeah, and there's my 5-minute chart has the session VWAP because it's a day trading VWAP, so we use the session VWAP. But once I go to the 1 hour and the 4 hour, it's an anchored VWAP to the weekly. So it anchors to the weekly at that point. So right now the session VWAP is at 584 and the weekly is right around 579, 580. As time goes on, as the month goes on, those will separate even further. The weekly time frame is the monthly VWAP, and that's sitting around $5 right now. So from a long-term perspective, that would be the VWAP you use. From a swing trading perspective, you can use the weekly VWAP. From a day trading perspective, session VWAP. So hopefully that answers your question.
It does.
Okay. We got 3 more we can roll through. So actually, I'm going to kind of pass Unlimited Brands, even though I like this one from a technical standpoint. I don't have a really good positive news catalyst right now, so I'm going to hold off on this one until next week and let this develop a little bit. Facebook. Okay, this is very interesting. Switching to bearish on Facebook. Even though I have long calls, I think that there was some really unusual option activity in Facebook. Somebody was buying a lot of the 145 calls for January expiry next year. So they're buying leaps in Facebook for a 145 strike. Now, does that necessarily mean that Facebook's going to 145 or they think it's going to 145? It's possible, but they could be buying such a cheap out of the money put option that they're not necessarily thinking it's going to get to 145. They're just thinking that, hey, they can go buy these really cheap options, have Facebook fall, and those options get repriced pretty heavily because they start off cheap. As it continues to fall, those put options gain in value. So I'm looking at kind of a very similar play on this one here. When I look at Facebook on the January 22 options, so when I look at that, I see deep. Where are they? January 22. Okay. So when I look at where can I get a good cheap option, say $3 and under, the 200 strike is pricing at 305 right now on the ask. So let's say we can get that for $3. That means, and right now it's only pricing at an 11% probability of in the money. However, if Facebook starts to sell off materially, those puts are going to get repriced, and those same deep out of the money puts are going to reprice in value very, very fast. Puts reprice faster than calls as a whole. So I'm thinking about buying the January 22 200 strike puts for $3 and then let them reprice, let Facebook sell off and reprice, those same puts to like $5, $6, $7, $10. Why is Facebook now bearish? Well, there's 4 things that happened today that were not good. One, they got an analyst downgrade, and it's the first analyst downgrade I've seen from a major bank, Citibank. downgraded them from, I think it was like buy to neutral, and they lowered the target dramatically. That's the first thing. Second thing, their plans to launch Instagram Kids. The New York Attorney General came out and said, do not plan on doing that. We're going to come after you, basically, if you start to do that, because of some of the problems with Facebook usage in kids and how it's kind of created addictions, all kinds of problems, security data. If it's a problem with parents, it's also a problem with kids. The third thing is Apple iOS just came out with their latest update. And in that latest update, they created this opt-in privacy thing that says, hey, do you want to let these sites track your data, whether you're online or offline? Only 4% of the people opted in for the data. What does that mean for Facebook? That means their ads are going to be way less efficient and their ad targeting is going to be way less efficient. That's bearish for their revenue because they're like, compared to Google, they are the number 2 in terms of ad revenue out there. So this is all very materially bearish for Facebook. And what has happened to Facebook today on the day, just look at the 5-minute chart, sold off. It opened at 314 and hit a low of 305. That's a pretty big drop. That's a really big drop. Even the bounce got stuck at VWAP and sold off. So I think rallies on Facebook now are short-term bearish. And so I'm looking for a rally to about 310, which kind of lines up right there, or a little bit deeper to just under this breakout point here, 314, 313. That will reprice those same 200 puts from $3 to maybe $2.50, $2. I'll make them much cheaper. We buy those puts. We don't have any other exposure after that. If Facebook starts to break through some of these support levels, those puts are going to gain in value really fast. So basically, we'd be trying to capture a high volatility move in a short period of time, reprice those puts, and then sell them for more expensive. The key to me is Facebook getting a weekly close below 296. If Facebook gets a weekly close below 296, 295, I think you're going to start to see this unwind pretty quickly. I think you'll see 286, and then you start seeing 260s and 250s. And when we get to 250, I'm sure that same put that we bought for $2 is now going to be worth $5, $10 at least. And so then we can get a nice 5x return on it, close it out, be done with it. We don't have to hold it to the rest of the year. So any questions on that one there?
Negative. We're getting
negative. Ghost Rider pattern is full.
Do you guys have any questions? Or are you so impressed that you can't speak? You can't utter a word through your keyboard. We're getting the hey Vio Noob. We're getting the general ticker request kind of thing so far. So I think so far so good.
Okay, let me do one quick one on XOM, and then we'll take a look at some open tickers. Okay. So you were talking XOM. I'm still bullish on XOM. I'm bullish on a lot of energy. Yes, it has cleared out the highs or this prior multi-week, multi-month highs. I'm seeing support right around $60. It's not only a major option strike, but it lines up pretty nicely with some good bullish support before, some resistance here. And you can see the breakout pattern here. That pressure just kept hit it, pulls back, hits it, weaker pullback, hits it, weaker pullback, breaks. When it breaks out, what does it do? It goes right back to the same level and then launches. So when I look at that as a nice pullback level to get long on XOM. Right now, XOM, I'm thinking that I would probably want to move the expiry out to June on that one there. But when I look at options on XOM right now, in terms of open interest, this thing's well supported to 60. And so a dip to 60, I would look to target 70 on this one here. I'm not seeing any necessary hedging activity needed until we get to 70. There's just a lot of momentum on its side right now. You have roughly 900,000 calls. You have roughly 550,000 puts. And while the May 21st expiry is the next largest expiry, it's not a whole lot of options rolling off. About 15% of the options are going to roll off. So that means there's still going to be a fair amount of options left on the table after the May 21st expiry. I think that means it's going to be supported for, May and June. So look to get a pullback. I have an alert set here to about 59.60. And I'm thinking of buying the 60.65 or maybe go a little gangster and go 60.70 bull call spread on that one there. If the calls are cheap at 60, maybe just get long outright calls. Right now, implied volatility is clocking in at 25%. And right now, those same $60 calls are pricing in at about 370 bid, 375 ask. So tight spread, good liquidity. If we get down $3, looking at the delta on that, those same 375 calls are going to be priced more around 150, 175. At 175, a $60 call for June expiry looks very, very good. That means that we only have to get to 61.75 by June expiry to get to break even. If it gets back up to 63.30, we're now in solid profit. I'm thinking a 65, maybe 70 target by June for XOM. So very bullish on XOM. That's my option play on that.
Boom. That's the big oil pick. XOM. I didn't want to do XOM because I felt like it was so mainstream and I just wanted it to be different because I'm emo like that. But it's been the fastest mover throughout 2021 among all the oil stocks.
Yes, and it's pulling the rest of them with it too. They're all looking at that as the leader. They're looking at the whole, if you look at XLE as a whole, it's climbing. XOM's climbing, everything's climbing. They're going to look at that, and then they'll start filtering money into the smaller ones. It's got great liquidity, so why wouldn't you trade it? And I'm pretty sure, did they bring the dividend back on this yet? No, yeah, they do, 5.5%. That's not bad. So
XOM.
Yeah, hard not to be bullish on that. Do we have time for some callouts, ticker callouts?
Yeah, let's do about like 3 to 4 minutes of ticker callouts.
Cool.
So let's get. I'm guys, no particular order. So just keep your pants on. Let's
Here
look
is
at
now sentiment.
So let's take a look at.
What does that say for mine? I don't know what that means.
You're just the future version, the final form. All right, so FSLY. Let's look at Fastly. I haven't heard of that one since last summer.
Yeah, we were keeping an eye on this. Okay, so FSLY. Let's see if there's anything. Ooh. All right. Anything in the Benzinga Pro app real quick, giving a shout out.
Visit pro.benzinga.com and get a free trial today. No credit card required.
$50 call sweep, but not a whole lot of calls. So nothing gangster. That was on Friday. Okay. So looking at FSLY, I'm kind of bearish on this on pullbacks. Look at this whole structure over the last several months using our impulsive, corrective, counter trend impulsive, but then we start getting back and you have lower high, lower high, lower high. You can also see this same bounce off this level. This bounce went from 57 to 76. This bounce went from 57 to like 62. Very weak buying interest the second time around. Slams through it. So to me, this is a sell on pullbacks. Looking at option open interest, I'm seeing resistance between 45 and 60. So I would take anything between, 47 and a 56. I think those would be great opportunities to buy puts on that. What's the price of puts looking at on Fastly right now? Implied volatility is decent at 63%, but right now the current at the money puts are about 4.440, 450 bid and ask. So if they were to roll up, if the price was to roll up to say 56, those same puts are going to be a lot cheaper. And your 50 puts will probably be at around $2, $3. Yeah, to me, that's the play. Wait for this to roll back a little bit. I would say maybe look for a 47 print. If the bullish pullback looks aggressive, give it a little more breathing room to 50, 56. 55, get into 55, get long 55 or 50 puts at that point. That's what I'm thinking. I'm bearish on Fastly.
Boom. There we go. Next ticker, AA.
AA. Ooh, yeah. Okay. This is another one that's kind of come up. Looking bullish on this one right now. Yeah, got to be bullish. So option open interest right now, about 170,000 calls, 105,000 puts. Not a whole lot of strikes rolling off this May, only about 12%. I'm bullish. I'm going to look for a pullback in this kind of right here. Support here, 39, maybe 40, 75, 40, 80. Let's take a look at the long-term charts real quick just to kind of step back, see where we're at. Okay, we're getting into some thick resistance here. but I think this is going to be well supported. Look at that 40 strike right there. Lines up really nice with support, resistance, and the monthly VWAP. So I think you wait for a pullback to looking at the 1 hour. I think you wait for a pullback to 40.16. Looking at the calls on that right now. Where are you? There you are. How are the June calls? Ivy is 53% right now for at the money calls. Bid and ask 330, 345. If we drop back $1, those same calls will be about $3 or sub 3. So basically we need to get from 40 to 43 to get to break even. Those are for the June calls. The May calls might be a little bit. Okay, May calls are a little bit better priced. So right now they're about 279 bid. If it drops $1 from here, $1.90, those same 279 calls should be sub $2. Yeah, if you can get a sub $2 call on the May expiry on this on a dip to 40, I would be long that, because you only need to get back to here and you're break even. Anything above that, and you're all in profit at that point. So yeah, bullish on AA. Very
Beautiful.
good pick.
Beautiful. Chris, thank you as always for joining us on a Monday here at Get Technical. Where can folks find more of that Chris Capre magic?
Our YouTube channel, Second Skies Trading. We just launched our intro to options trading video part 1, and part 2 is coming out this Friday. So watch that, give it a like, smash that like button. We appreciate that. Other than that, secondskiesforex.com. That's our website. So that's where you can find us. It was great seeing you. Be well, and I will see you next Monday.
Thank you very much, Chris. Have a good one. All right. So Chris will be back with us on next Monday. As he said, let me reorganize some shiz right here. I want to get over to his YouTube channel. I want to subscribe really quick. So let's get my house in order here. Blah blah blah. Stop share screen. Blop blop like that. YouTube, drink your milkshake clip. So he said Second Skies trading. Second Skies trading. Dude's got more all right, you got my subscription. I'm hitting the bell. Everyone, you know what to do. Get over there to Second Skies, subscribe, hit the bell. Show the man some love. Dude's coming on every Monday and giving us great picks with actual options, like describing like how he wants to trade it. Gooder than gold, guys. So with that, I want to thank everyone for tuning in today for Get Technical. Oil is the word. Metal is the word. Check your ETFs. And then check your ETFs, look at XLE, look at XME, find the strongest tickers inside them, use your technical analysis that you've either learned here or from your own education, and trade them. Be profitable. Trade stocks that are in strong sectors, not stupid stocks that people talk about on social media. Thanks for hanging out with us on a Monday. This has been Get Technical. I'm Neil Hamilton. With me, as always, has been producer Aaron Bree, AB, out of his hobbit hole, looking good, looking like CEO for the day. At any rate, you guys have all been wonderful. I love the stock recommendations that we're getting in chat. Special shout out for the assistance on technical analysis. 500-day moving average. Looking like that's going to be a very important moving average to have on your oil stocks as future resistance in a lot of these. So guys, you all rock. Make sure you condition your hair, but don't blow dry it. It's not good for it. Thanks for watching, guys. Happy trading.